Good morning, everybody, and this is your S&P 500 day trade setups for today. So, turnaround Tuesday, massive move down the previous day, and then a big engulfing green day on the day afterwards. So there it is there. Now, is it going to continue like this, as it has in the past, or is this just a one-bar pullback in a bear trend, ready for another move to the downside? So those are the two questions you should be asking yourself at the moment. And I think first thing to do is understand what happened here. So Fibonacci was the very first thing that you needed to pay attention to with this move, and I did talk about this on Monday. And hindsight being a perfect science, I didn't see the entry, but we should have taken the entry on the 61.8 at the 155 EMA on the 8 hour. Perfect opportunity to buy into this. There it is there. And yeah, it basically pulled up to the upside. Now, the thing we need to pay attention to at the moment, and I've got this wrong, just delete it, is the current Fibonacci retracement. So where are we? At the 61.8. Now, just bear that in mind because I'm going to show you something else on the lower time frames now. But the question at the moment is this a V reversal or is this a retracement and now another move to the downside? Now, being in an uptrend, that's kind of where you would be is V reversal for a break to the upside. But let's just get down through the time frames and you'll see the structure that is forming. So firstly, on the 3 hour, have a look at your oscillators. Firstly, there's the high of the oscillator, it's higher there. There's the high of price, it's lower here. That is diversions. Okay, so it's diversions at a retracement level of 61.8. Gap is closed as well. We have made a lower low. The question at the moment is, are we going to make a lower high? Now, the Fibonacci red line here is pretty much showing you the trend line as well. So that would be capped around 43.50. So if you look at this at face value, in amongst the moving averages at the moment, with the crossover, very good possibility that this is going to form some structure for a move to the downside. Alternatively, it is going to form structure and continue to the upside. And that is exactly what happened yesterday. So if I delete that Fibonacci there, and I take the Fibonacci for the move of yesterday, so that was the, sorry, not yesterday, the day before yesterday, but that was a sell-off that we had on Monday, and then look how we came back up to the 61.8 and just formed a range between the 38.2 and the 61.8, formed a range before breaking through it and coming to test the day's highs, and then took a day's highs out. That is significant because a lot of people would be seeing this as a bear bar, and if you break it to the upside, then that bear trend is broken. Now we're looking for a continuation to the upside. So in my view at the moment, kind of a 50-50 call. Moving averages are still pointing to the downside on the hour. Oscillators have crossed and pointing down as well. So I would be paying attention to this little range that's forming at the moment. So come down to 15, break to the downside, stop is on the high, and you'll have your shorts, and you can sort of trade this anticipating that it is the second move of Monday's move down. Break to the upside, then you can pretty much be guaranteed we're coming back to the top here, and that would be a retest of 44, more than likely get to 4,400. So those are the two trades on offer at the moment, and if you look at the distance between that level in the range and this level, almost in the middle as well. So yeah, that's kind of my view at the moment. There's a lot going on in the markets at the moment. You know, if you look at the bonds, you look at the 10-year bond yield, which is falling, and then you look at the dollar, which is rising. So, you know, typically when that happens, it is a trigger for something bigger that is about to happen. But you know, it doesn't happen overnight, so it does take a few days, weeks, sometimes months before it starts happening. So we could be just bouncing around like this for the next quarter, and then maybe the last quarter of the year or first quarter of next year we start looking at something different. But there is something brewing, and I am looking for opportunities to buy into it. It may not be at this level. You know, I still believe a nice deep pullback down to this 3968 4,000 area would be ideal. That is a decent 10% correction, which is what would be bought. But that is far away. Anyway, at the moment we're in an uptrend. This could be a reversal off of 61.8, or it could just be a range for break the upside. So just get down to your lower time frames. It'll save you a hell of a lot of pain. And if you start dropping below this, actually just pick this level here, 43.16, good opportunity for short, nice tight stop, smallish position, and then because you are going against a trend, and then see if you can get the move going. Alternatively, if it does break the top and start retesting, then you're looking for 4,400 as the upside target. Okay, anyway, that's it for me. Hope it helps, and we'll catch up with you later. Cheers for now.